G'day everyone and welcome to Seven Questions, a podcast that shares the stories and compelling lessons founders, investors and leaders shaping our economy. I'm your host, Gerard, founder and investor at Partner and co-founder of Create Financial. Through Seven Questions, we explore the founder journey, idea to legacy, uncovering the insights, lessons and defining moments that shaped each founder and the amazing business they built. Whether you're a first-time founder, serial entrepreneur, investor, or someone looking for insights on entrepreneurship and what it takes to build a world-class company, these conversations are designed to inspire you, get you thinking, and hopefully you'll find some timely wisdom that propels your journey. Today, I'm joined by Aaron Birkby and Don McKenzie, the founders and general partners of Tribe Global Ventures. I've known Aaron for over a decade, and he's played a pivotal role building and shaping Queensland's startup ecosystem. I've got to know Don over the last 3 to 4 years as he and Aaron embarked on their journey to build Tribe, a VC with a mission to help Aussie founders scale into the UK and US markets. Hey guys, welcome. It's great to have you on the pod.
Hey Wayne.
Thanks, Wayne. Oh, both of us at once.
Well done. So you're in Perth this morning, 6 a.m., an early start like you always seem to do, guys. How is it over there?
Bloody awesome. Like West Tech Fest is a phenomenal event and it's just so great to connect with the ecosystem here and see what's happening. It's really matured a lot. And the realization for us is we need to spend a lot more time here.
100%. Especially given a lot of Perth, for me, the vibe is similar to Brisbane. It skips a lot of the stuff of Sydney, of New South Wales and Victoria. So yeah, looking forward to coming back.
Guys, before we get going with 7 questions, let's help the audience get to know you. So who are you? What experiences and moments shaped your journey as both founders, because you've both been founders, and now as investors?
I'll kick off. Like, who are you is a deep question, Wayne. But I think for me, both my parents were entrepreneurs. So, but their message all through my childhood was whatever you do, don't be an entrepreneur. But can't deny the person I am. So yeah, had a couple of tech companies, kind of a group that I sold back in 2012, 2013. And then on the back of that, got quite involved in the startup ecosystem and taking Aussies over to different markets like the US, the UK, Germany, Israel. And it was really that experience, I think, that shaped my mindset on how to help the ecosystem. And then, meeting you, what was it, maybe even 12 years ago and doing a lot of the work in the Queensland ecosystem to set up policy and whatnot. So founder at heart, and Tribe is very much a continuation of that founder journey.
Awesome, Aaron. What about you, Don?
Yeah, I had the traditional entrepreneurial journey where some things went really well and a lot of things turned to absolute rubbish. And during that, I think learned enough to be dangerous, which I really enjoyed then applying to helping founders. And for a long time, wanted to really help founders whilst deploying capital. Didn't really have a path to do it outside of my own early stage and angel investing. And then met Aaron, and a bit like the scene in the Titanic, we hold each other closely whilst moving ever forward.
I remember fondly that retreat that Tribe ran, that you guys ran a couple of years ago, just before I exited Red Eye, and the quality of the conversations that you guys had with the startups at the retreat was first class. And since then, I've spoken to so many founders, Don, that absolutely, rave about the quality of the support and advice you provide. So you're clearly one of the best operators that I've met in the ecosystem, and your intent and capability to translate that intent into really clear messaging, which is actionable for founders, is something that I think really defines the Tribe value proposition. So let's kick off with 7 questions. And these 7 questions are designed to help people get to know you guys and to give you guys a platform to share what's important to you, how you're thinking about the world from the lens of both being founders and now being investors. So we'll start with what inspired you to build your fund? What gap or emerging opportunity are you guys addressing with Tribe?
Yeah, so I'll start this one. It was really on the back of Startup Catalyst taking Aussies over to international markets and just realizing how phenomenally talented our companies are, but also how, I guess, undercapitalized, but also undervalued in comparison to their US and UK peers. And so really wanting to wrap more support around that. Like Australia really needs this. We have some phenomenal stats. Like Australia produces more unicorns and decacorns per capita of pretty much any country. So we outstrip Silicon Valley on that performance. We outstrip Israel, China, and others. But Aussies need a lot of support. So really this was about helping the Australian ecosystem. But the beauty of it is there's a really good commercial play here for investors because we can ride the valuation arbitrage of these highly capable founders, phenomenal companies that are undervalued by international benchmarks. And so it's a great investment opportunity. And I think the third piece for me, the reason why was just looking at all the other support that was provided by other investors and just realizing, wow, there's a huge gap here. They say they help, but actually there's a huge gap in the support that founders need because it is bloody hard. And there's lots of graveyards on the way to going international. So this is particularly where Don just adds a ton of value to the portfolio, which is very differentiated to other funds.
I can genuinely say I can't think of another investor in Australia that has such a clear value proposition around expanding globally, right? So you guys, I think, have defined that niche and are really owning it well. Don, what about you? What inspired you to build the fund? What gap did you see and or opportunity are you guys trying to address?
Mine's a little simpler. I heard Aaron say what he just said before and said, "Oh, I'm in."
I love it.
I'll bring my have toolbox. We'll travel. So yeah, that I really aligned to that thesis, and I mean the thing we often say, the riches are in the niches. Like really trying to not just be a generalist investor, but one that goes a little deeper. But we just want to be known as the firm to call if you've got a company that wants to go to the US or the UK that's got product market fit locally. Like if we can get that brand understood, I'm all for it.
The firm to call if you've got product market fit locally and you're ready to scale to the US or the UK. That is a pretty clear and compelling value proposition for any quite frankly, any founder that is at that point in their journey.
Whether it's the founders or other funds, we love to co-invest and we love to work with other investors as well.
Makes heaps of sense, right? Question number 2. What unique insight, thesis, or investment advantage sets your fund apart, and how does that shape the way you pick and support your companies?
Yeah, I'll kick this off and then I'll hand over to Don because I think when you think about the 5 things every investor has to do, they've got to see deals, they've got to pick the winners, then they've got to actually win the deal, then they've got to support them and they've got to exit them. And our kind of view is that the first 2 of those is becoming commoditized, like the tooling that's available for every VC to see every deal and have tools to pick out of that against their criteria. Where we see the differentiation is winning deals that others can't. And so for us, that means having differentiated support that truly adds value and leads to better investment outcomes, where then founders want to choose us as a preferred choice. So hence why we run the missions, the offsite that you referenced before, because we want to build those relationships with founders earlier. So that's one bucket. I'll get Don to speak to particularly the founder performance side. But the second thing we really look at is durability. Like what's going to make a company survive and build pricing power long term? And that's why we were quite early on the thesis around IoT and having hardware and physicality in the mix because we saw where AI was heading and its impact on traditional SaaS. But the ability to get proprietary data that's feeding the compute power of AI for the next kind of evolution of the S-curve of its development, we were early on that because we look at durability. And so I think there are a couple of the key kind of thematics that inform our thesis and why it's a bit differentiated.
I was literally rereading the summary from your trip report, the AI summary, Don, that you wrote. I was rereading it this morning and so compelling, so true. And you're seeing it play out, what is it, 9 months, 6 months later, right? In a fast moving world, having the I guess, the infrastructure component or the physicality component, as you call it, Aaron, to as part of your investment thesis makes a lot of sense in a moving environment like we have today. Don, over to you.
Yeah, I think the word unique is what I'm trying to anchor on. I guess one of the big issues is founders tend to build products that nobody cares about outside of themselves. And so I think we're pretty good at working out, is this a really passionate entrepreneur that has found a problem that only they care about? Or is this actually something the world cares about? Then there's lots of entrepreneurs that build stuff that the world cares about, but the entrepreneur doesn't know how to message it properly, doesn't know how to message, market, sell it. And then let's say you get over that hump and you've got strong sales. The majority of companies that don't survive, they died unnecessarily. And they generally died because of some strength overplayed from the founder, some behavior, some pattern. It's sort of like the energy that's required to get a business off the ground is often also the energy that causes significant problems. And I think we just have some unique ways and insights that we go about helping that founder performance aspect and just helping them traverse the life cycle, where it's understanding, yeah, that was really normal and functional and good for that phase. But now there's a transition that needs to happen here. And a lot of investors don't have that kind of model, and nor do the founders. And then companies, disappear and companies get into trouble, and there's always excuses. There's always reasons. There's this happened and that happened. It wasn't my fault. When actually boil it down, there was no sort of structural way of traversing the life cycle locations. So I think we're a bit unique in that.
So when you take that and look at how do you support your portfolio companies, you seem to have like literally a toolkit of methodologies and processes that you run on. Where did you get those from? How did you shape them to fit portfolio companies, and what's been the response?
Yeah, I got a lucky break and got into business when I was 18, and then was part of CEO groups and entrepreneurial groups like pretty well for a couple of decades, and consume content like it's going out of fashion. And then, so I've spent a long time in my own businesses and here just reading and acquiring and then testing, and just over a period of time developed a toolbox of a range of different tools that I've actually used with success. And there's a lot of tools out there that intellectually make sense, but in the real world that they don't actually deliver in practice. And I've literally spent millions of dollars on consultants in my previous lives. And now I like the fact that I've sort of get to bring a filtered mechanism. In terms of the feedback and the response, like our approach is a sort of a pull approach rather than a push. And what needs to happen is founders need to sort of like work shit out for themselves. It's a bit like having teenagers. Like you can't really tell them anything, but you got to make sure that the relationship still exists. So when they get themselves into trouble, they give you a call. And that's the same here, right? So we will often have a conversation with a portfolio company and say, hey, this is where you're at. This is what's going to happen. Here's some things. And quite often they'll go, oh, yeah, no, but we're different. Or, yeah, no, I got it. And you go, okay, no problem. All good. And then you just wait, sometimes 6 months, 12 months, 18 months. And then as long as they can get over themselves and their ego doesn't cause them a problem, then they can come back and say, oh, you know that thing that we talked about? Yeah, could we get some help with that? And then you say, great, no judgment, let's get into it. And that's often the common pattern. You just got to be available, and you got to let them have enough rope that, once they start turning blue, you can turn up to help them. But until that point, don't bother.
We're invested in a bunch of companies, and I've invested in some companies through you guys, right? And speaking to the founders, and it's common for me to hear about, hey, we just had the whole team together and Don came in and spent half a day with us and it was fantastic. So I feel like more founders reaching out, or founders that are maybe at the stage of the journey that you guys see as your niche or your focus area, get the benefit of having someone who can come in with an unbiased view and run a process that engages the whole team or the whole exec team or the founders and the board or whoever it is. And I think that's a really powerful and compelling part of your value proposition. Let's shift on to question number 3. And it's a question about what's the hardest decision or challenge you guys have had to face as both founders of Tribe and also as general partners running a fund?
I think the hardest challenge always is we're constantly raising capital. Like we just need more capital, more capital, more capital. Like we have phenomenal deal flow. And it's interesting, like Wayne, you know this, but a lot of VCs are saying, deal flow is a bit tough at the moment. We've got the opposite problem. We have so much deal flow, we just need more capital. And so that's in terms of the challenge word, I think that's the perpetual challenge. Don, I don't know, what's been our hardest decision to date?
Yeah, I was trying to think, like we've pulled out of a couple of deals because of very bad behavior, but that wasn't actually a tough decision. So that doesn't really fit into that bucket. I don't know. Just
it is kind of tough though. Like, being in a deal, having called capital, waiting to complete, and then finding these signals where it's like, we're not going to complete. We're going to return capital and lose out on the management fee. As an emerging manager, I wouldn't say it's a hard decision though. I think you're right, Don. I think they were
the
easy.
decision was hard. The consequences, they've got some uncomfortability when you've got to go and you talk to others on why. But yeah, I'd agree. The raising capital piece is probably the bit that I underestimated in all this. But if you want to play the game, you got to develop the skills.
So let's talk about that for a moment, because I think it's a really important topic. And when I think about the people that are going to listen to this podcast, a lot of people that I know are senior executives, they're board members, they're people who come from, decades in executive careers, and they care about innovation. They see the benefit of the companies that they're on the boards of, or the companies that they work in, changing, transforming, innovating. And I'm sure they'd be open to investing. And in fact, I've spoken to a lot, and they are open to investing, but they really don't know where to start or who to trust, right? So what would you say to people that are in that kind of executive and board bracket that probably would like to, learn about how to invest in some early stage companies? What would you say to them at the moment, given the market and, your personal experience?
Do you want to take this one, Don?
Yeah, now is an absolutely awesome time to invest. And what always tends to happen is that after you get these big times of boom, and the COVID boom, 2021, 2022, where valuations went through the roof and deal flow was just like, it was like a lot of FOMO. Now we've well and truly come off that. Vals are actually really stabilized. Entrepreneurs have gone back to building really good capital efficient businesses. Now is the time that a lot of good deals are coming through. And the second part of it is you've got to make sure you choose the places where you're going to get good deal flow. And that's part of the challenge. If you want to allocate to this asset class, if you want to do it under your own steam and find your own deals and ready to dedicate your time full time and go to all the events and create all the partnerships, go for it. Or find, some funds that do this as their vocation with a good track record and get involved.
I particularly like the stage that you guys invest at. And I think that pre-Series A to Series A stage is a relatively de-risked stage for people who are early in their investment journey. Do you just want to talk about why that's the case?
Yeah, I think, and it's a good point. Like, I think a lot of investors threw a lot of cash in that COVID boom time into pre-seed and seed, and there's a very high failure rate there. But if you think of it like an onion and removing layers of risk as a company builds out, by the time we're investing, they've typically reduced a lot of the product risk so that the product is in market, it's being used by customers, the company has revenue, and particularly some of the signals we look for is around have they actually started to experiment with a scalable marketing and sales engine? And so you're really looking for these proof points that, and it's a risk-adjusted sweet spot in terms of the return profile too. So you've basically reduced the risk of failure to a certain extent. It's still there, but you've got much more upside because it's usually that tipping point where we're coming in as almost like the last check in Australia before their international expansion, where then you've got the valuation arbitrage of those markets and the different valuations that they command over there, which is roughly like a 2x on current data. You know, we're 50% undervalued compared to US and UK counterparts. So we really see that sweet spot. And to be fair, when we started, we kicked off as pre-seed through to Series A, and it was some of our early investments actually shaped that. And it's fair to say of the 14 companies that we're in, we only have one that's actually not doing so well. And that was a pre-seed stage investment, which we just wouldn't do again. So it's definitely, we practice what we preach, and we've learned as we've gone.
Yeah, which is really powerful, right? And I think shows the track record and the capability that you guys bring to investing. And certainly the way you're going about it is, it would be a great place to start if you were an individual looking to allocate a proportion of your portfolio. Let's jump on to question 4. And it's a question that I think is super important because, my own founder journey, I wish I knew more about how venture funds worked so that I could have been a better partner to the funds that invested in me. And so this question is really quite simple. What's one thing about starting and operating a fund that founders probably don't know that they should know, or at least be aware of, because that way it'll help them to be a better partner to a VC?
Oh, yeah, I echo your thoughts there, Wayne. Like, I wish I understood VC more when I was a founder out in the market. And I think it's very important for founders to actually understand how VCs operate. More than anything, it's the fact that we are perpetually raising capital and we have to sell the investments to our investors. And particularly because we have a syndication model that we've commenced with before setting up the fund. Like, every deal, we are out selling that deal to the investors. And when we sell something to the investors as a fund, we have to stay true to what we have sold. But it is a 7-year valley of death for a new fund manager in Australia. So an emerging VC, it's a 7-year valley of death until you have enough funds under management where you can actually cover your OPEX. And so it is a bloody hard business model. Hence why we do the missions to the UK and US, hence why we do the offsites and growth summits. Like, we have this differentiated revenue stack because that is the only way to survive. And so I think if founders understand that, what it also means is emerging fund managers are bloody hungry to make it work. Like, we can't afford failure. We don't have a big blackbird portfolio where we can write off 50% of it. Every deal has to be a winner for us because that's what we'll be measured by when we go to raise fund 1. And we have to make it to fund 2 before we can wash our own face. So emerging managers, if you're a founder, go with an emerging manager that's going to bust a gut to help you and make sure you succeed, because it's an alignment of interest. We have to see every portfolio company win.
It's a big difference, right, between a well-established fund with multiple layers of team and capacity that is self-sustaining, right? You guys truly own every decision you make, and the consequences for you and your families are directly there. No different to a founder journey, right? I remember my founder journey, I didn't get paid for the first 2 years. I paid my team, but I couldn't afford to pay myself, right? And it's the same journey for an early stage investor. You truly are all in. And I think it's super important for founders to take the time to just put themselves in the shoes of an investor and think about what's the obligation and responsibilities of an investor, and how am I helping them to get there? And also, how does that influence the feedback they give me so that they're better informed? Don, do you want to add anything to that?
Yeah, I think the reporting side, we have to provide at least quarterly reports, and our life's a lot easier if the companies can just get into a rhythm of helping us with those reports. But if done well, the way we try and structure those reports is that every time a portfolio company does it, it provides some value back to them. They think through something. They go through a bit of a thought process. And the more you can practice doing that before getting investment, just getting into the rhythm, you'll actually find more investors get behind you. Because one of the things we've got to work out is like, is this going to be a slog to support and get all the stuff I need? Or is, this company demonstrated ability to help me so my life's a bit easier?
Do you see a role for AI in helping portfolio companies provide reporting back to investors?
We've already started rolling some of that stuff out. I don't want to get to a point where the AI is just writing it and it's all hallucinated crap. We get enough hallucinated crap from founders, but it's coming.
Yeah, I definitely see the same thing as well. I think there's a whole bunch of portfolio management optimization that should be coming through all the various providers of the tools that investors use. Let's hit on to question number 5, which is, what's been a pivotal moment, a deal, a missed deal, a founder relationship, a market shift, or something that's changed the trajectory or thesis of Tribe?
I think there's been a lot, but like the one that I keep coming back to, it's actually the pivotal moment of when we started. Like, I think kicking off Tribe and a brief conversation with Adrian DeMarco, so the founder of Tech One, and him just coming in as a shareholder, as a venture partner, supporting us. And then others that followed. So, Mick Dempsey, who exited Easy Debit, Mark Salby, yourself, Wayne, like that just, it constantly makes me feel 7 foot tall and bulletproof, but also bloody hell, the accountability, because you don't want to let these guys down and guys and girls in our cap table. Like it's just I think that's the most pivotal thing that just keeps carrying through the business. But then definitely look, other things, it's interesting in the VC world, like you're always measured by the ones you say yes to, but it's interesting your anti-portfolio and what you've said no to.
Yeah.
And, shout out to Eating with Auto Guru. I think that's going to be one that sits in the anti-portfolio for a while. And then I think the other big one that comes to mind is just the market cycle more than anything else. Like I think the biggest impact on our business is just capital flows of the macro environment and the post-COVID VC venture boom and how that plays out now in terms of liquidity for investors. So they're the key ones for me.
Awesome. Don, key ideas from you, key pivotal moments or deals or relationships?
Problem is, mate, they happen every bloody week. So I'm just trying to
you love all your kids eating, right?
Yeah. Got to go through the mental filing cabinet. No, look, there's probably been some really pivotal ones where there were going to be things that we thought were going to happen that didn't, and we had to really resolve ourselves to stay in the game. There's times where team changes and you've got to work through that and stay in the game. It's metal is, what is the saying? Something like something is born in fire. Like you've just got to accept that these are going to be parts and decide whether you're going to get to the other end or not. And those that do, they stay, and those that can't go, and you just keep moving.
Yeah, which is a perfect segue into question number 6, right? Which is, how do you guys sustain your energy, your mindsets, your relationships with each other and also at home while you're building the fund and trying to support all these amazing portfolio companies?
Well, given how Aaron and I are looking on this video at the moment, the question of how do we sustain our energy, I think.
Clearly not via sleep.
Yeah. I look like I'm 87.
I think one big one, Wayne, is zooming out and really, like, we want to build a business for the long term. Like this is the rest of our lives. Like we've found what we love to do and the intersection of something you can make a business out of. So anytime there's kind of a crisis or anything else, it's like zoom out, think for the 20-year mindset. And this is something Adrian DeMarco is brilliant at, and just that patient capital mindset. And part of that as well is looking at it as seasons. Like, there's seasons where you're harvesting, and then there's seasons where you've just got to look after the fields and survive droughts and whatever else, and not trying to do all things at all times, which I think I've got wrong in the past. And so, like, personally, my physical fitness is down at the moment, but, Tribe needs certain attention. There's other things going on. And then the big one for me is just, man, when you're with the right team, bloody hell, it's fun and it gets you through. Like doing this with Don, fucking fantastic. Like the transparency in our team, the openness to have hard combos, the self-work that I think each of us does, like just finding our own issues internally and dealing with them. And hopefully that's working on for me. So, but yeah,
That's on my list. While we're down here, but let's have a chat, Aaron.
I love it.
We'll do a little review.
But, like even, shout out to Jack. Jack's been with us from day one. Like he started as an intern in a previous business. He came over as an intern. He got paid massively under market rate for so long. The guy has busted himself doing 2 jobs while Tribe is surviving. And I think, his mindset and what he's brought to this and his dedication and commitment for all the reasons we talked about at the start, like when you've got a team like that, you can weather anything. And so it's, for me, across the entire stack, from shareholders to venture partners to team to the founder and their wins. And it's interesting, like Don and I, because this is a bloody stressful game at times, but then we will catch up with a portfolio founder and hear something in there. They've had some win or something, and it's enough to keep you going, put fuel back in the tank to go again. So,
or the opposite, where you catch up with them and their world's even more screwed than yours. Yeah, that sometimes you go, okay, I'm all right. And then you roll up your sleeves and try and help them. Yeah, I get a lot of motivation that, Aaron mentioned Jack and the sacrifices Jack has had to make. And there are some days where you go, okay, you've really got to pull your socks up to make sure that sacrifice is returned. Yeah, you do the best you can on the health side, but the reality is when you're building a fund and you got 3 kids and you got whatever else, sometimes things lapse. And then, we probably get involved in a few non-traditional things that help get the mindset and the energy pointing in the right direction. But the main thing, I think Aaron's right. You got to zoom out and make sure that you're passionate, but still have some critical. Like Aaron and I have had some conversations down here, and there'll be some more. You've still got to have some critical looks at some things sometimes and say, well, hang on a minute, we made some decisions with this direction. What's the world telling us at the moment? Should we be adding something? Should we be subtracting something? You've got to sort of make sure you've still got the energy to do that bit. Otherwise, if you pig-headedly only stay in one direction, life tends not to reward that. But the older I get, really investing in managing your own energy is so important.
The other thing I'd add in, Wayne, because you mentioned home life too. Like I think, for Don and I, the advantage of having phenomenal wives that do carry the bulk of different parts of household work and everything else. When I'm traveling, kids are at home, Marin's looking after them today because school's wrapped up. Like it wouldn't be possible without that. So having phenomenally supportive partners who are also invested in their own growth journey. And like for me, Marin is just the enabler that makes all of this possible. So yeah.
Pretty special, right? Like I was lucky enough to go to an event last night, a Christmas drinks, and it's the only one I've done this season. Yeah, because you have to drive in from the farm. It's an hour and 3/4, and Andy came with me, and we were talking, and it was really nice for her to get out and participate in an event. But she feels really kind of like, I guess, unsure about how to present herself because she's been a stay-at-home mum, right? And she's made sure that the farm we live on and the kids and everything else has worked perfectly while I've gone off and done all the things I've done. And I think sometimes, there's no title for that job that is an easy title to say when you're at a networking event. I think that undervalues the significant contribution that our partners make, and it's incredibly valuable. Having a focus as a founder, on your relationship and how do you keep it going and how do you make it work and how do you give enough time to it certainly is, took me a long time to get that part right. That's for sure.
Yeah.
It's something else from doing this thing, right?
Yeah. And as a team, we like recognizing the priority of kids and family. Like for Don and I, I'm flying back early from Perth because my daughter's finishing year 6 and I want to be, part of that experience. And Don and I often prioritize that. And Jack too, with a newborn or a 1-year-old now, understanding that is important and actually prioritizing that. And the advantages of working bloody hard when you can means that you can take those moments as well.
I like the way you talked earlier about the reality that you can't perfectly balance every day. And so work-life balance on a day-to-day basis is in my lived experience, it's a folly, because there are periods where you have to push yourself into a particular topic or area of your life because it needs attention. And
Right.
when that's the fund or that's a portfolio company or that's the relationship or that's your health and fitness, you've got to double down on those areas. And it's more, I think, taking that long-term view and going, overall, am I trying to live a pretty sensible life, investing enough into each area?
Yeah.
Sometimes I think founders beat themselves up. Hey, they try and fit everything into one day, and maybe a better view is to say, can I fit enough into each week or each fortnight or each month or something like that?
Yeah.
Yeah, I think you're dead right, and it comes back to what Aaron, I think, was saying earlier, just about needing to zoom out. And when you just get too close to it, and you don't get into an environment where you can zoom out, which is why we like running our offsites and retreats, you've got to have that perspective, and you've got to be able to be kind on yourself. That you've had a run of bad days and bad weeks. If you allow the entire year to be a run of bad days and bad weeks, well, that's a problem. But expecting not to have some bad days and some weeks is just not the right perspective to bring to it, I don't think.
I think the retreats and the trips you take to the UK and US are incredibly valuable opportunities for people to get within a peer group who value and are struggling with the same or similar things, and having that time out to focus on those things and maybe zoom out and get some perspective and bounce some ideas of other people is, it's priceless. And, for all those founders out there that are going to listen to this, I really encourage them to pop along to one of your offsites. I think they're fantastic. I've done one and I really enjoyed it. And I keep saying to you guys, I want to come to the US. I really want to come to the US. I missed going this year. So maybe it's 2026, right? Yeah, it'd be fantastic. Hey, let's wrap up with question number 7, which is what's next for you guys, and how can founders, LPs, and people who want to invest and the community more broadly engage with Tribe, engage with you guys, and collaborate.
Yes, what's next for us is our new fund. So we've launched our Nexus fund, a $30 million fund. Same thesis, but enabling us to move faster on deals. So for investors and LPs, that anyone sitting on some capital that really wants to support the Australian ecosystem and help more Aussie tech companies get on those global stages, and also at the same time benefit from that valuation arbitrage and get great returns, connect with us, jump into the fund, join the syndicate, get to see some of our deals. And then for founders, like you said, Wayne, I think the missions and the offsites are a great way to come and get to know the Tribe vibe and what we stand for and our values. So we're heading to the US in March. That'll be New York and San Francisco. We're heading to London in June, and then we'll be back in the US in October as well. And then outside of that, jump in, listen to a podcast, attend some of our events, and if you are a company in the B2B space that is looking to scale to US, UK, we'd love to hear from you. We'd love to connect.
Awesome. I'll put links to your website, your podcast, and all that kind of stuff in the notes from this podcast. Aaron, anything to add? I mean, Don, sorry, anything to add? What's next?
The thing that just came to mind, what next, is more of the same. What next? We've got like a conveyor belt now, an operating model. We know what we need to do to get the fund closed. So what's next is just doing the hard yards of executing what we now know to be true.
Love it. Guys, I want to finish with a set of rapid fire questions. You get to choose one answer, not two. You can't procrastinate. It's first thing that comes to mind. Right. Coffee or tea?
Coffee.
Tea.
Morning or night?
Morning.
Really? With those eyes?
Yeah. When you believe it, Wayne, with a face like this.
Beach or mountain, guys?
Beach.
Love it. Books or podcasts?
Podcasts.
Podcasts about books.
On the fence, Don. God. Okay. Risk or routine?
Oh, you need both.
I'm a risk kind of guy, even though my life would be better with routine.
Yeah, that's a good answer.
Aaron?
Yeah, there's got to be risk. Yeah, risk.
Yeah. What life is brightest living on the edge, right? Build or buy?
Build.
Build.
Well, it's easier to
Depends on
buy.
size.
It's easier
Yeah.
to buy. But because I'm a degenerate, I'll say build.
Okay. And lastly, legacy or lifestyle?
Legacy.
Legacy, yeah.
Yeah, I get it. Definitely. Guys, it has been absolutely great to have you on the podcast. Thanks for taking the time to share your both founder and investor journeys with everyone. I think what Tribe's doing and the niche you guys have carved, that pre-Series A to Series A, helping Australian companies scale into the UK and US and bringing a complete toolkit that really has the tools, the processes, and the lived experience to, I think, help shorten the founder decision-making cycle and help founders to really think through challenging, opportunities and situations and put their best foot forward is a compelling part of Tribe's value proposition. Thanks for taking the time to catch up today. It's been fantastic to have you on the show. Enjoy the rest of the time in Perth, and I hope you get back in time, Aaron, for your daughter's grad. Cheers, guys.
Cheers, mate. Really appreciate it.
Thanks, Wayne. Thanks for having us.
Thanks for listening to this episode of 7 Questions. If you'd like to learn more about the founders, you can get a link to the full show notes in the description below. Have a great day. We look forward to you joining us on the next episode.